Joining us now is ARK Invest's Tasha Keeney and Guggenheim's Ron Yovsikov. Ron, I'm going to start with you because we've been teasing it like this, and I think this is correct. It's a bull-bear debate here. I'm going to start with the bear, given the print we just got and some of these key misses, including, as I just mentioned, GAAP gross margin, X credits coming in at 14.6%. You had said to us a couple weeks ago when the robotaxi announcement was pushed to October that the quality of Q2 earnings was going to matter more. Your thoughts today?
Yeah, I mean, I think the key takeaway, looking at the numbers, you mentioned the gross margins, X credits missed, but I think the key takeaway is the second derivative of the business actually isn't improving here. I think there was some debate coming out of 2Q deliveries if the quality of deliveries was good. And the reality is we see with the gross margins, X credits line this quarter missing by quite a bit that Tesla effectively bought a lot of business this quarter. And I don't really see how that changes going forward. We've already seen quite a few new promotions launched to start the third quarter.
Tasha, I want to get your thoughts on these results, especially since I know ARK is a long-term investor in Tesla, and you've come on the show before and laid out the case for autonomous driving and robotaxis. But even if that is the future, it's arguably years away, so why buy the stock now?
Yeah, so actually, I think, when we're talking about robotaxis, this is something that will happen, we believe, within the next 5 years. So in fact, our 5-year price target, we think that robotaxis will contribute over 90% of the enterprise value of Tesla at that point. So I think, I'm looking forward to hearing more detail on the call. What we've been seeing from Tesla is, of course, incremental software updates. They have a latest version of FSD where it's very limited in its release currently, but they're adding the functionality to take your hands off the wheel. They said in the letter that they expect the take rate of the full self-driving software to increase based on the increased functionality that they see. So I'm looking forward to hearing more about that rollout, because I think to ignore robotaxis today is a huge mistake with this stock, because ultimately it's an AI play.
Okay. Ron, I don't understand the robotaxi business model case. I mean, the entire market cap of Uber right now is around $141 billion. And if Tesla's robotaxis wipe out the need for Uber and they take all of that, it's still not that much. Plus, if they're that good, doesn't that mean I don't need to buy a Tesla? And won't it be really hard to make the numbers work if people buy fewer Teslas because they can just get a robot-driven Uber?
Yeah, I think the argument that robotaxi bulls would make, and again, we're certainly not one, but the argument they would make is the pie grows massively. I think the argument we would make, and we're seeing this in China already, is pricing comes down massively, and most of that excess profit and excess margin gets competed away. I mean, right now in China, Apollo, which is owned by Baidu, to be clear, is offering rides for just over 10 cents a mile. I think most robotaxi bulls would view that as a very blue sky pricing scenario for robotaxi models. So I think what we struggle with robotaxis isn't that Tesla can't get there at any point in time. It is the timeline, but it's also what steady state unit economics look like, because even if Tesla has a $10,000 cost advantage in robotaxi, that's a massive cost advantage. Over 1 million miles useful life for a vehicle, that's a penny a mile. It's not that meaningful.
So Tasha, do people want to be driven around in really nice Tesla robotaxis that are so high quality that they're going to pay that much for the ride? Why would robotaxi be worth more than selling a whole lot of Teslas?
Well, you compared Tesla to Uber. I'd say that Uber has proven that the ride-hailing market should exist and there is demand for it. But robotaxis will greatly expand the current ride-hail opportunity. I mean, I think it could be a 10x or more expansion.
Right,
that's because
unless people stop buying cars altogether. I mean, there aren't that many more people or that many more places to go, are there?
So it's not about selling individual cars. It's about the utilization of the vehicle. It's about the miles traveled on the car, and you're paying per mile here, right? So today, we were just talking about China. Yes, ride-hail is priced significantly lower than the U.S. in China. But in the U.S., Uber is charging $2 or more per mile. Tesla can undercut that price because it already has a lower operating cost thanks to its electric vehicle platform. Add autonomy on top of that, that really leverages that cost structure. And once you're able to lower price, you bring more people into the market. You start having, by the way, which is already happening in certain cities, young people will forego buying vehicles because they'll say, hey, I'm going to take an autonomous ride-hailing network because it's actually not that expensive. And in fact, it's cheaper than me driving my personal car if I account for the all-in costs. So I think that's what's really exciting here. And again, I do think that the US is where we'll first see this rolling out. I do think China will be a much more competitive market. In fact, in our valuation for Tesla, we have reduced economics for that reason, because we also believe that there's a chance they might have to share with other local players in terms of the take that they get.
Okay.
But makes no mistake, I mean, this is a market that you should not ignore here.